In this video, traders, we're going to have the old human versus algo debate, which is don't be in such a rush to automate your strategy. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so I was having a discussion the other day with a trader. We're talking about automating strategy, and his side of the argument was, hey, you can automate any trading strategy out there. You can replicate any human. And my side of the argument as well, I don't agree with that. I think there's some great algos out there, some great stuff, but I don't think we're at a position yet where the very best traders can be replicated by an algorithm. I kind of came up with some reasons, he came up with some responses. I thought, you know what, this is the perfect one for you guys, the YouTube crew, to listen to and put in the comment section below your thoughts on this one. So my argument was this. It was like, okay, humans are very, very good at certain things, and we'll look at some of those in a moment, and algos are very good at certain things, but a good human can still replicate reasonably what an algo does. Now, forget about an algo in terms of, jobbing stuff in and out and being very, very quick on executing prices, say, making a market in thousands of equities at once. Of course, a human is nowhere near as good as an algo for that. But if we're talking about a strategy, whatever trading strategy, we're forgetting about kind of speed or anything like that, but we're just talking about maybe a day trading or swing trading strategy. Algos are good, but humans can still do the same thing algos can do, as long as they obviously going to make mistakes still and stuff which algos don't. But I think it makes up for their adjustment and intuition and being able to adapt. Now, of course, there are algos out there that are doing very well in the markets, but you tend to find they're cyclical, right? They'll do very, very well in algo, and then it will kind of stop doing so well and have to have another system. So there are companies out there that have multiple algos running, but there's still a lot of human intervention, a lot of discretion, we'll get to that in a moment as well, as to when to put that system or that kind of hard-coded system to work. So let me know your thoughts on this in a moment, guys. Right, so my thought is that one of the arguments I had was broad bias does not equal fixed rules. What do I mean by this? So you may come into the market and go, right, it's a trending market, I want to be long. I want to be long on dips, right? Pretty standard strategy that most of us will implement some form or another. Now, that is one thing, but then actually putting it into rules that are very, very binary. Hey, I'm long here, my stop's here, my target's here, my trail is here, whatever. It's very, very different. And, often that's when systems break. We can go in with a bias, say we want to stay long, we want to try and find the pullback, we've got some different ways of doing it. But, we adjust things on the fly potentially, or we'll adjust per day depending on the market conditions. Maybe the conditions are really kind of suddenly does a massive run to the downside. You're like, well, hang on, let me just might have to give it another day here. Because just your intuition says, if I've got this much volatility to the downside, I don't want to just be stepping in at my 20-period moving average on my daily or whatever the rules are. My stop doesn't want to be 50 points anymore. It's more like it's got to be 150. So you end up dynamically adjusting things. So I think that's key, guys, is that very often you can have a bias that works very well, but that is very miles away from fixed rules in terms of risk management, position sizing, all that kind of stuff. Second one is humans are better at pattern recognition. I believe that humans are so much better at noticing things rather than giving an algo fixed rules and saying, and listen, to a certain extent we can do that. We can say, hey, a linear regression angle or an ADX or something to denote a trend or distance from moving average. But, very easily humans, it will come back to, you can eyeball something and go range. And it might just be out of the parameters of a trend when you're doing a very systematic approach, but it still looks reasonably trending. And so you're like, well, it's a trending environment. So I think humans are very good at recognizing patterns. Now, that can be a downfall for many traders because we try to force patterns on the market that aren't there, of course, but forget about that discussion for now. Forget about the downfalls, but just the case of, can algos be better than us? I think that if you're considering a good trader, they recognize patterns far more effectively. Another thing is emotions can be a useful tool. As a trader, if you're feeling like, I feel like I want to get this market, I want to get on this, you can bet that a lot of other traders are feeling that. So you wait until that exhaustion, and then you wait until buy on the pullback, or you wait until the fear when you get that downdraft through support. You're like, whoa, this is. You can feel like almost feel the fear coming through the screen when you've been trading for a long period of time. You're like, okay, there's a lot of emotion in this order flow. It's not just systematic chugging; it's emotional order flow. And yes, to a certain extent, you can probably code that, but you get the point is that the emotional feel of the market comes across far easier to read as a human. You can look at a man or a woman's face, and yes, you could tell very subtle things. I mean, obviously they're frowning at you, obviously angry, but there's very subtle things, isn't there, that you can tell that someone may be angry, not quite right, that humans, the algos are okay at, they're getting better at, but they still can't pick up things. So we're very good at that. So if the market is a kind of group of humans with emotion, we can say, right, listen, there's a lot of greed going on in this market. You don't need to wait for the pullback. I don't need to chase it. Whereas the systematic trader might just go and buy it because it's going up and it's going up quickly. The other thing, guys, is that systems still rely on humans to have the final say, right? They're coded by a human. As we not yet does an algo have its own bank account and can make its own decisions from that. Ultimately, the final decision comes from the human. The human is saying, hey, here's $2 million of my assets. It's going into this algo. Oh, this algo is like 30% drawing. Let's pull it. You know, and that's just the same as any trade, to be honest. So the way I always look at a system is it's just the same, really, as a trade, right? A stock. You know, the equity curve could easily be a stock if you plotted it out. Yes, it's doing multiple trades, and yes, it might be doing very well, but ultimately at some point the greed might mean you put more into it and double up the, you know, there's all sorts of things. So humans still have the final say ultimately with systems, which is worth considering. And that also means that, you know, if they're pulling when they don't know what's going on, they're fearful. Final thing, guys, is the dynamic nature of the markets. There's infinite ways they change, and you know, a good trader can look at the markets and can make a discretionary call on what they want to do that day or that week based on their intuition. Now, this sounds a little bit, oh, well, you know, but you think about, you know, the very, very best traders in the world, and maybe you yourself. I know from my perspective as well, you know, I've only been trading 15 or so years compared to some of the greats who have been trading very many times. Even if you're trading for a few years, you start to know and to feel when something is the right trade to make, the wrong trade to make. Something's not quite right. It feels like it could break through here. It feels like it's not going to rotate on you. You tend to be right more often than wrong once you try to harness that intuition. And that's something that potentially could be programmed into an algo. I don't deny that could possibly be the case, but at the moment it doesn't seem to be there. You know, I still think that humans have the edge. Now, are all traders better than algos? Definitely not. You know, we're talking about the best traders versus an algo that can compete with it. I still think the best traders out there are humans. Now, it's not to say that we can't harness this, we can't leverage on this, we can't utilize this and say, hey, this is a long condition, or use some sort of binary event and then hand it over to a human for the final decision. Some human who's got that intuition, who's developed it, understands the markets, feels the little nuances, the little clues, the little tells and different things they've been watching throughout the decades of trading, and then making a final decision on position size, on stop loss, on entry point, all that kind of stuff. So heavy lifting from the algo, humans doing the final intuition activation. Now, that might change. Who knows where it goes, but we kind of seem to be getting a little bit of a stumbling block now with machine learning. It's been going for a while. Machine learning's been available for a while. And we still haven't yet, as far as I know, maybe there's a secret kind of algo sitting there just hammering the market. We haven't yet seen a point where algos have really kind of overtaken a really good human discretionary taker. Not the trader. Not say it won't happen in the future, but I still think that, you know, we've got this edge, and if we can harness it, then, you know, we can do better than the average algo out there. Anyway, guys, let me know your thoughts on this one. I don't know if I'm right, or maybe I'm wrong. Maybe there is something I'm missing. Let me know your thoughts in the comment section below. And I'll see you next one. Take care. Bye-bye.